So thank you for being here. Appreciate you coming to what may be considered by many a dry topic. I love bookkeeping, so I don't consider it a dry topic, but I know that many do. And I think we're going to learn a lot about bookkeeping and accounting and even Total Office Manager in a direct way. I wanted to announce Aptora Pros. It's our new Facebook group. You probably saw the slide, but didn't hear my voice. It is a place for you to go and voice your opinion or enhancements and features of Aptora software. You can share your own best practices, your own ideas. You can address questions from other users, ask your own questions. Aptora will certainly be in there addressing questions and addressing comments. We hope that you can learn about new proven business strategies, different things we've learned, different techniques. We're going to have live presentations. We'll announce news and events at that page, in addition to sending out emails. But we hope that that'll be a gathering spot for all of the Aptora software users. So please check it out. It is live right now, and we're announcing it for the first time, so you'll be one of the first in there posting. I'd love to see your posts and would love to communicate with all of you there. Another thing that we are announcing is what we call Aptora Live coming August 4th. It's going to be a new webinar replacement, a webinar replacement for this. We're going to be doing things in a studio like we're doing now. We're in the green room. We don't have a background. We wanted you to see the green room, see the green. And we'll be doing broadcasts from here. We hope to have a whole new format, which should be much more interactive. We'll have guests. We can have all of you on. You can share your screens if you want to. You can share your webcams, whatever you're comfortable with. But we think it's going to be a lot more fun than this particular forum that we're using now. We're switching away from Zoho. We'll be using Microsoft Teams. You don't have to own Teams. You'll be able to join that event without Teams, but we are going to be able to take advantage of a lot of features that Teams offers that Zoho doesn't offer. One thing we promised is that you would learn about hiring bookkeepers and how to interview them, what to ask them, and so forth. So what we did is we sharpened up our Bookkeeping Hiring Kit. This is a kit that I created myself a while back, and I updated it and I made it available to all of you. It is at aptora.com. We can always talk about this later. I can show you this information later if you'd like, but it's at aptora.com. If you go into the shopping cart, it's a product. Just search for Bookkeeping Hiring Kit. It is $199. It's on sale for $99, but we have a coupon for $99, so it's free. You get it for free. It contains a lot of material, by the way, that I think you'll find useful. So please check that out. I think everybody knows me. If you don't, I'm the president of Aptora, and I'm also involved in the accounting business. I have a website, mrhvac.com, which I write regular articles. Please check it out if you'd like to. All right, so let's get into this bookkeeping topic. The first thing I want to talk about is accounting versus bookkeeping. The terms are used interchangeably. I even find myself using these terms interchangeably. I will sometimes say that Total Office Manager accounting software. I'll say we make accounting software called Total Office Manager, but it really isn't. Total Office Manager is mostly bookkeeping software. And I'll talk about why in a moment, but we're really mostly bookkeeping software. At least the work that you do in Total Office Manager is bookkeeping. The accounting, which it has accounting, but that's all automated. So a lot of people ask, what's the difference between bookkeeping and accounting? The concise answer really is bookkeeping involves recording data and financial information, while accounting involves analyzing, classifying, interpreting the data, reporting on the data. So bookkeepers basically manage the collection of all the data, paperwork, filing, all of that. They typically record that information in journals. The accountant takes over when it's time to create the reports. That's when the accountant takes over. Now, remember, we're talking about manual bookkeeping, so a lot of us don't have accountants anymore, which is a shame. But in the old days, before software, There were bookkeepers and there were accountants, and the bookkeepers did their job to a certain line, and the accountants took over, and their job was to create the reports. What are some bookkeeping functions? Well, we're all pretty familiar with these, I think. Bookkeepers deal with invoices. They record payments from customers. They make sure that that money gets deposited. They record, process, and pay invoices from suppliers, bills. We call those bills. Remember, we send invoices to people and we pay bills. But to the vendor, they sent you an invoice. Weird, isn't it? But bills are bad, invoices are good. They record and monitor changes in inventory. They process payroll, deal with petty cash transactions if you do those anymore. Most of us don't have petty cash drawers anymore. They categorize credit card and other related expenses. They, of course, monitor customers for late payment. They look at AR aging reports and they make phone calls, try to collect money. They order and receive supplies and inventory. They gather forms and documents for the preparation of reports. That oftentimes is the most frustrating part, is running around trying to get everybody's information. Now, as you get big, your company gets larger, one bookkeeper isn't doing all these things. You might have multiple people. You might have somebody in charge of nothing more than collections. They do collections all day long. What about accounting? What are some accounting functions? Well, it's important to remember you should have an accountant do your initial setup of your bookkeeping and accounting system. So they would create chart of accounts for you to use. They would create a division department list for you to classify income, COGS, and expenses by. They would design your financial and managerial reports. So, in other words, they would ask you what kind of reports are important to you, and you would tell them, and they would make sure that you were doing the things you needed to get those reports. What things do you need to do? Bookkeeping things. They would figure out how you're going to record your revenue, your COGS, your expenses. They might help you create a budget. They might help you calculate your pricing, your markup, your retail pricing. They might help you monitor your business for tax related issues and compliance related issues. So the accountant does those things. The initial setup is really important. The initial setup is what your bookkeeping department will follow. Your bookkeepers will follow the initial framework set up by the accountant. If you don't have that kind of relationship with your accountant, you probably don't have an accountant. You probably have a tax preparer. I think some of you have heard me say that. Many of us just have a tax preparer. Now, it might be called something accounting, like, XYZ accounting, but they really don't do a lot of accounting. They just prepare taxes. Your accountant should be an advisor, someone that you deal with on a regular basis. Now, accounting has a lot of subcategories. As your company gets larger, the accountants might divide some of their duties into these areas, such as financial accounting, cost accounting, human resource accounting, management accounting. So there's a lot of different types of accounting. Now, financial accounting is the traditional accounting, and that really encompasses what most of us are used to. Let's talk a little bit about that setup that I mentioned earlier, the accountant who helps you set things up. So the first thing that you and your accountant do is you make a decision on tax and managerial accounting methods. You should always use the accrual method for management. None of you should be interested in cash accounting. We have people call us and say, "Does your software do cash accounting?" No, thank goodness, no, it doesn't. It'll do cash accounting for sales tax, for example, and certain other specialty things, but the reports don't have an option for cash method accounting. You do not want that. It's okay to file your taxes using the cash method accounting, perhaps. I say perhaps because there's rules. They help you set up your chart of accounts, your sales tax policy, your payroll policy, inventory management policy and procedure, all the required forms, filing systems, and things like that. So the initial setup is really important, whether you have software or you're manual. We're pretending like there's no software option here. All these things have to be done when we do bookkeeping. And then again, the bookkeepers follow this framework. And then the last item is hire a specialized accounting firm. Even if you had an inside accountant, degreed or not, CPA, yes or no, doesn't matter. You should have an outside firm because they're needed for certain things. So let's talk more about the separation of bookkeeping and accounting. There are really three stages that I want us to talk about. There could be four. Stage one could be considered the initial setup of your bookkeeping system. Stage one, once that's done, stage one is bookkeeping. So, bookkeeping is mainly related to identifying, measuring, and recording financial transactions. And it can be a headache. You see, this guy's got a headache here. It could be a real headache doing all that. A lot of paperwork. Now, stage two is accounting. And accounting is the process of summarizing, interpreting, and communicating financial transactions, which are classified in the ledger. So these things, all these pieces of paper, this poor guy with all the paper, that paper gets recorded into ledgers, books, and then the accountant goes through those books and starts trying to make meaningful sense out of that information. And they do that by generating financial and managerial reports, reports that managers use to make decisions. So the final stage, stage three, is the financial reporting. The accountant produces financial reports. Now, accounting is the basis of business decisions. You've heard me say that before. If you've been on these webinars, accounting is the basis of business decisions. Can you afford to hire a new tech? Talk to your accountant. Look at the report. Can you afford to give all of your techs more money? Look at the reports. Talk to your accountant. What should you charge per hour? How much should you mark up your labor, your parts? Should they be different? Do they vary by department? Yes, is the short answer. But by what degree? How do I know the answer? Talk to your accountant. Look at the financial reports. You should have a report that shows you that. There are online calculators that help you determine all of those things, but those online calculators ask you for information that you will only get from a report. And what if that report doesn't have that info, or what if it's inaccurate or incomplete? Management makes critical decisions based on these reports: who to hire, who to fire, where to give raises, what to do, up or down, left or right. All of these decisions are aided with good financial reports. So that's what the accountant does, internal or external. That's what your accountant does, creates the reports. What did we ever do without computers? Most of us take it for granted. As I started studying this for an article I was writing a while back, I wrote an article on manual bookkeeping. I was even surprised. I mean, I thought I knew bookkeeping pretty well, but I'd forgot a lot. And I'd forgot how bad it was, how hard it was. I got started the manual way, not for very long though. We did things manually for like 6 months, 9 months maybe. And then we had DOS software and quickly got to Windows. So I do remember manual bookkeeping, but unlike some of you, I didn't do it for years, but it's a ton of work. It's amazing that people were able to do tens of $1 million in revenue with no computers, no software, no spreadsheets. It was all paper, and they did it very well. Let's talk about the history of bookkeeping and accounting. It goes way back, and this won't be on a test, I promise. You don't have to memorize any of this. The point is that accounting goes back 5, 6, 700 years. The whole idea behind debits and credits and double entry bookkeeping is old. And remember, double entry bookkeeping is just that, not accounting, it's bookkeeping. The accountants take over when we have to verify the numbers, make sure everything's in balance, and start creating reports. That's when the accounting people take over. Otherwise, our bookkeepers are doing everything up to that point. One thing about bookkeeping, there are a lot of forms, lots and lots of forms. It's amazing when you really think about manual bookkeeping, it's amazing how many forms were involved. But they're required. All of these forms are required. Take a look. Chart of accounts, departments, your SKU list, your part numbers, all the items you sell, sales proposals, estimates, sales slips, invoices, credits, refund slips, customer statements, petty cash slips, time cards, time sheets, vouchers, work orders, service agreements. You have a service agreement form, right? Invoice form, estimate form, sales proposal, company letterhead, all kinds of different letters, collection letters, purchase orders, approval sheets, bill of materials. You have pull sheets, pick tickets, change orders. Maybe you do AIA payments. You have a checkbook, of course, checks. Most of us rarely ever use a checkbook anymore. I mean, I don't. Payroll checks, pay stubs, all the different payroll forms, vendor forms, your inventory journals, inventory activity. Someone has to write down everything that got sold. Remember, we're thinking manual bookkeeping. Pretend like we own a store that sells shoes or hardware, or we maintain vehicles that go out and sell things. It doesn't matter. We have to write down everything we sold because we have to reorder it. And we have to have price sheets and SKU sheets, reorder sheets. We have to deal with packing slips and receipts and bills, and we have to pay those bills. And what if we get a vendor credit? We have to file that somewhere. So we remember to take the vendor credit when we go pay the bill. Bank deposit slips and bank statements, credit card slips, credit card statements, calendars, appointment books, the phone message slips. Remember those while you were out? Those? Lots of notebooks and logs. So there's a ton of paperwork involved in bookkeeping. And there were a lot of machines. You might remember the old adding machine, like this one here, or you went to print a check. You might have had one of these machines right there. Time clocks. Many people are still using the time clock. Maybe it's gotten a little more modern. And we had a place to put our time cards, and the bookkeeper had to go grab those time cards. And God help you if she couldn't find one or he couldn't find one. They had to go grab those time cards, and then they would take an adding machine like this with pencils and erasers like that after they sharpened them with one of these, and they had to write all that down so they could create your paycheck by hand. These guys down here, a date stamp, we take that for granted. In software, everything is dated, but you had to stamp everything with a date or write the date on there. And this guy right here on the left, it's hard to tell what that is, but that's an auto number. Maybe some of you have never heard of such a thing, but we used it. We used this at one time in my company years ago. That's how you number documents. It gave every document a unique number. And oftentimes the office would have just one of them to make sure that the numbers are unique, and you had to borrow it from somebody. And you stamp the documents, service agreements, invoices, things like that. And then there was filing all this paperwork. You had to file all this paperwork. You had a place for your schedule cards, these T cards. You had file cabinets, tickler files, all kinds of files, customer files. That's a real picture. If you guys are here, you know who you are. We asked you if we could borrow that picture. There it is. That's a real picture of a company that uses our software, and that is their file system. Fantastic. It looks like a doctor's office. Very good. So once you have all these forms, and there's 40 or 50 forms, and you go out and get all that equipment and the machinery and the typewriter and pencils and all those things, Now it's time to think about all the bookkeeping processes. And it took a lot of time to figure out who was going to do what because bookkeepers have a lot of work to do. So you had to figure out who's going to do all these things. Whose job is it to process payroll? Whose job is it to walk around collecting forms, making bank deposits, etc.? And remember, all of this is done by hand, payroll done by hand, pay stubs were done by hand. Now, once all of these things are filled out, we have to organize them. So we organize our invoices, our bills, we organize our bank statements, checks, things like that. Once they're organized, they are entered into journals and ledgers. You're entering those into journals and ledgers. And those were typically books, bound books. We probably have seen those. Maybe you've seen them on TV. Very few people probably remember writing in those. But you would write all those transactions, double entry. You'd write down everything that happened in these journals and ledgers. And sometimes they were referred to as day books. You'd have a day book and you'd write down everything that happened during the day, money going in, money coming out, money collected, etc. And those are put in journals and put in ledgers. And it took a long time. And again, the worst part of it was all double entry. This information's been entered already somewhere else. It's just too bad that it couldn't somehow flow into these journal books and ledger books. But no, they don't. They have to be written down. So you wrote every customer's name, every invoice number, the amount, how much they paid, how much they owe, etc. Took hours and hours of work. Now let's talk about some of these books. We've heard the term keeping the books. I keep the books for a company. You don't hear people talk like that much anymore, but old school people might say, I keep the books for XYZ company, or I used to keep the books for them. What they were thinking about were all these general ledger books, these ledger and journal books. Your general ledger is, well, let me back up. Let me say this. Let's talk about the general journal. So the general journal is your first book. The general journal is where things are written down first. They might start with what's called a day book and then transferred to the general journal. But the general journal is where it starts. And that's why it's called general journal. That information is then transferred to the general ledger. This is usually done by a full charge bookkeeper or a junior accountant. Again, in the old days, right before software. Remember, the old days were only 20 years ago. 20 years ago, this is all being done still. Software was relatively new and not very powerful. So those transactions are then posted into the general ledger, and the trial balance is performed. We have to see if the debits and the credits match, and they usually don't. And someone's running around trying to find the missing dollar, the missing $100, the missing 18 cents. But we do a trial balance to see if the credits and the debits balance. And once we get those in balance, then we can start creating our reports. Now, some companies can have many different ledgers. You can have all these different types of ledgers, not a general ledger, not just a general ledger, but you could have all these different ledgers. That's a lot of ledgers. But for many companies, one ledger book would not be enough. They would need to have an accounts receivable ledger, a payable ledger, a bank ledger, sales ledger. That's how you knew how much sales tax you collected and how much you had to pass on. Fixed assets have to be depreciated. They have to be maintained, taken care of. How do we know what fixed assets we bought? Well, there's a filing cabinet full of those receipts and user manuals, owner manuals, warranty sheets, and all that. There's also a fixed asset ledger book where we enter the date, the description, and other information about that fixed asset. And accountants, an accountant's not going to go to your file cabinet. the accountant goes to the fixed asset ledger to see what you bought and decide what to do with it. Depreciate it this year, next year, over 5 years, all in one, never, etc. That's a lot of work. Now, I've mentioned debits and credits. I haven't really talked too much about them, and I didn't want to bore you with debits and credits. Happy to talk about that. But a lot of us think about debits and credits when we went to the bank and the bank said, I'm going to credit your account. We're really sorry about that mistake. Or you ordered checks for $19.99 and they debited your account. Well, that debit and credit, that was a debit and credit for them, not you. So we tend to get confused and think debit always means go down and credit always means that we're going up, and that's not the case. It just depends on the account. We have a debit and credit cheat sheet on our website if you want to search for it. But here's the bottom line on it. When we're doing our accounting, we have to make sure that we have at least one debit and one credit for every transaction. So whenever you sell something, you buy something, you borrow money, whenever you depreciate something, everything you do has to have at least one credit and one debit. And you got to make sure you write that in the proper book. And you got to make sure your handwriting was legible. That's why people used to have wonderful handwriting, not so much anymore. You had to make sure it was legible. Someone had to take that adding machine and total them all up, and those debits and credits always had to match, and that's how we had the trial balance. And the trial balance was a scary thing because it needed to be done before you could start your reports, and you were just hoping that they would match, that the debits and the credits would match. And like I said earlier, they often did not. And it was usually because we misread a number, misentered a number, transposed a number. Maybe we were adding things up on that 10 key and lost our place. Somebody interrupted us. Maybe we weren't using a tape. A tape. People are like, what tape? Some of you know what I mean. Some don't. But you had that piece of paper that was showing you everything you had entered and totaled up and subtotaled, etc. So you'd look back at the tape, start writing on the tape, look through the tape, go back to adding your machine. Imagine that. And then you made your final adjustments. So we make our final adjustments. Sometimes we put in an adjusting journal entry, and that would get the debits and the credits to match. It would just magically fix whatever was wrong. Now, adjusting journal entries are something that you should be doing very little of in your software. Adjusting journal entries should be generally very rare. Back in the old days, an adjusting journal entry was rare. It was usually because we just gave up. We could not find what the problem was, so we did an adjusting journal entry. Now, don't get me wrong, there's legitimate reasons to do adjusting journal entries. It might be for depreciation. Every month we might depreciate. Certainly at the end of the year, we have adjusting journal entries for depreciation and other things. We might want to transfer money from one account to another. By the way, that's a whole nother book, a whole nother journal. You want to transfer money from one bank to another or from one account to another. It was a whole nother book, a book of transfers. Once you made your adjusting journal entries, then your books were closed. You closed the books. And that's where the term came from, because you literally took a deep breath and closed the book. And you are done with it. And then it was time for the accountants to take over. And they would go back to those books and they would start generating reports. Now, this is important for all of you. Your financial reports are only as good as the quality of the bookkeeping and the level of trouble, detail that went into your record keeping. So let me say that another way. Bookkeeping is the key to excellent reports. Your reports are a reflection of your bookkeeping. And I'm not criticizing a bookkeeper in general. I'm simply saying that Bookkeeping is super important. Not only is that how we make sure that invoices get out, bills get paid, people get paid, it's also how we make sure we have meaningful reports. Now, many of you have heard me say this if you come to these webinars. A common complaint I get is, James, we haven't gotten a decent financial statement out of your software since we bought it. The job costing is horrendous. The balance sheet's wrong. AR aging's a mess. And I keep telling my people to fix it, and they tell me that Aptora has a glitch, or there's a glitch with the software. Now, it's possible there's a glitch, it's possible. One of our job costing reports, we discovered a bug. It was rare, seemed to only affect one company, but it was a bug and it got fixed. It took a while. So it does happen. Now, the income statement was right. The balance sheet was right. Cash flow, things like that were all correct. The general journal was correct. Just the job costing report was wrong under certain circumstances for labor. Thankfully, it was so wrong, it was obvious. You noticed it. So it does happen. But for the most part, Total Office Manager or any software you might use, when it comes to creating reports, it's nothing more than a fancy adding machine. So when you go to generate a report, it's just an adding machine, adding things up incredibly fast, incredibly accurately. But those reports, however they look, is a reflection of the bookkeeping. Accounting relies heavily on the bookkeeping. We're nowhere without the bookkeeping activity. So when I say reports, generally I'm talking about 5 reports. These 5 reports are considered to be the absolute most critical must-have bottom line reports. The balance sheet, that report shows you what you have, what you owe, and whatever's left over, usually called equity. The income statement shows you how your balance sheet became what it is. It shows you everything you sold, how much you paid for the stuff you sold, how much overhead or expenses were necessary to carry out those sales, and whatever's left over, net profit. Your statement of cash flows tells you why your bank balance is what it is. Some people will ask me, and I totally get it. That's a good question. If I made $100,000, meaning, we had 100,000 in net profit, like 2 years in a row, well, why don't I have $200,000 in the bank? If I have a net profit of 100,000, why do we only have 10,000 in the bank? Or why did our bank balance go up this year by 10,000 when we had a $100,000 net profit? How is that? And how can I know when I'm going to run out of money? How can I get some kind of warning? I mean, my income statement shows me I'm making money. My balance sheet shows me I don't have any money. The statement of cash flows does that for you. It shows you exactly, not kind of, but exactly how your bank balance got where it is. But it's totally wrong if the bookkeeping is wrong. And by the way, none of these things are possible under cash method of accounting. Cash is a joke. This is all accrual, double entry. The 4th report is your accounts receivable with aging, money that people owe you, not just anybody but your customers, not notes payable by banks or things like that. This is money that your customers owe you. You want a name of every customer. You want to know the amount, the date that they borrowed the money, because they are borrowing it from you, and the date they were supposed to pay it back and how many days that was. And you want those organized in 30, 60, 90 and beyond. And you do the exact same thing with money you owe people, your accounts payable with aging. And that allowed you to understand who you owed and who owed you, how much money you were making, how much money you have in the bank, what your cash flow looked like, what your bank balance would probably be in a month, good or bad. Those 5 things will tell you all of that. Now, there's other reports that are nice to have. Those reports are easy. once you have those 5 reports. That same information, the same information that went into these reports, the essential 5, are used to create other reports. And there's more than 6. I just gave up after 6, but you have reports that might show you your key performance indicators, financial ratios, job costing reports. Certainly you want those. But a job costing report is really just an income statement by a job name. Job costing report is nothing special. There's no such thing as job costing as an activity. So, in other words, there's no job coster, there's no activity for job costing. It's just bookkeeping. The only thing you have to do is pay extra attention to who the job was, the job name, the job number. You're still handling all the same forms, you have the same procedures. You just have to pay a little extra attention to the name of the job, not just the department or the account number. So when you write a check, the question is this for a job? Oh, write that on there. When you invoice somebody, you say, is this for a job? Oh, make sure that customer's name is on there, or the job, not the customer's name, but a job name specifically. So whenever you're dealing with money, you just have one extra step. What's the name of the job? But that's really not an extra step because that's a sub of a customer. You have a customer called 24-hour fitness and it's store number 1. You just have to write 24-hour fitness / store number 1. So job costing isn't really a thing. It's just, it comes from bookkeeping. You might want reports for sales performance, marketing analysis. You might want reports that break down payroll more thoroughly. You might want operating budgets. You might want to have a budget compared to actual, estimate versus actual budget report. Those things are pretty easy to do once you have enough information to do these things. Now, in manual bookkeeping, you had the numbers, but you had to add them back up. You had to pull out the typewriter, you had to type them back up, or you would write them by hand. Sometimes you had templates that you would fill out. So it might have been quite a bit of extra work to do this, but the basic bookkeeping handled it. So, in other words, the bookkeeping was adequate. Then software came along and it changed everything. It changed everything about bookkeeping, but bookkeeping is still bookkeeping. Software bookkeeping is bookkeeping. And some people out there, maybe it's you, maybe not, some people out there thought when they got software, they could cheat the bookkeeping system. The bookkeeping gods would no longer require hard work, but they do. You still have to keep the books. But what software did is it didn't eliminate the forms. It just eliminated the double entry. It allowed you to automatically add the customer name and address and phone number and the job name and the account numbers and once you entered something, you could use that something to enter something else that was related. For example, you could create an estimate and then from the estimate create a purchase order and from the purchase order do an item receipt and from the item receipt do a bill. And then you could pay the bill and you never once in Total Office Manager redo any of that. But you don't get to skip it. You still can't skip it just because it's software. And what software did is it also made the calculations instantaneous, nearly instantaneous, and it's super accurate, 100% accurate in most cases, unless there's a little bug or something like that. But it still was way more accurate than the manual method. The point I'm trying to make is that easy button is not a real thing. It's not real. It doesn't really exist. I mean, it does. You can buy one. We have one. But it doesn't do anything. I've tried. I push it a lot. Nothing gets any easier. Software makes you far more efficient, more accurate. You can get a lot more done, but it doesn't allow you to skip bookkeeping. And Total Office Manager is just a bookkeeping system. It includes all the forms and the documents that a manual bookkeeping system would have, right? Think about the manual system and then think about Total Office Manager. We have all those forms. The filing cabinets and the copy machines have been replaced with Total Office Manager's Document Manager. So now you're scanning documents and you don't have file cabinets. You don't have a copy machine. You have a printer. And if you need to print it, you can print it, but you don't usually have to because you just look at the PDF and there's no date stamping or sequential number stamping because the software does it. And there's no thinking about job names because they're in there. You don't have to write them down. There's no carbon paper. Remember carbon paper? They must have thought that was the greatest invention ever. Carbon paper must have been a fantastic leap forward in bookkeeping, but we don't have carbon paper. Most paper forms are eliminated. They're now on a screen. And all of that information is in a database so that it can be retrieved quickly. Journals and the ledgers, they're gone. Now, they're actually in Total Office Manager. So, did you know that Total Office Manager has all those books that I showed you earlier, all the journals? It has a sales journal, purchasing, fixed asset journal. It has all of those. It has a general journal. It has ledgers. They're all built into the software, but no one ever sees it. There's even a trial balance form, but I'm not even sure why we put it in there. I think we put it in there back in the beginning because people expected to see it. But you don't have to think about a trial balance. You don't have to think about filling out all those books. And reports are created in seconds, not days. So here in Total Office Manager, as you open up these menus, you'll see what is essentially all of those forms. There's your paper invoice, your paper sales receipt, meaning they walked into your store and said, I'll buy this. And they handed you money and you filled out a receipt and you put the money in the cash drawer. Cha-ching. And that's why that icon has the little money next to it because it's for a sale, like they walked into the store. And maybe they wanted an estimate on something, so they weren't ready to buy today. You fill out an estimate. Maybe they have a complaint and you give them a credit that they can use next time around, or maybe you gave them a refund. There's the form. And maybe they want you to send them a statement. So rather than get out the typewriter, you just create your statements. And rather than fill out a paper purchase order, there it is. There's your purchase order, your paper one. Now remember, manual bookkeeping had a purchase order. Software has a purchase order. People tell me all the time we don't want to use purchase orders. Then you don't want to do bookkeeping. And that's fine. It's your company. That's why you own your own company. You don't have to do what I tell you to do. Who am I to tell you what to do? But if I can be your business coach, and that's what I'd like to be today, at least, you want to do purchase orders. You don't want to skip any of this bookkeeping. Don't let anybody in your office talk you out of doing bookkeeping. You need all this for your reports. So there's your paper PO. And then eventually when you get that stuff, you're going to have to receive the items. That's a piece of paper. And then they're going to send you a bill and you're going to file that. You're going to stamp it with your little stamp, right? You're going to write it into a book. You're going to put it in a tickler file. And eventually it's going to go into a file cabinet, not with Total Office Manager. You're never going to deal with that. You just enter the bill. If you want, you can scan the paper and then shred it. Shred it. Don't keep it. Get rid of it. When it comes to your employees, payroll, there's a form in there for everything. So we have an electronic form for all of that. And then again, the beauty is as you're doing all that, we're never asking for double entry. We're putting all the basic information in ledgers, in journals, really, journals. And then when you're ready to do your reports, they're almost instantaneous. So check this out. This is a company with tens of millions in revenue a year. They're about 10 million a year. I have 4 years of information. And in 4, 5, 6, 7, in 7 seconds, we took our adding machine and added all this up. I say that because remember manual. Think about what it would take to do this manually. So here's a company doing um, 6 million earlier in the year. These are real numbers. 27 million, 23 million for the year, 22 million, and this was early in the year. They're on schedule to do 35 million this year. All of that, my point being is that the software went to all those journals and tabulated them accurately. I'm guessing 100%, and in 7 seconds. And people say the software is hard to use. Now, I think one of the reasons why it's hard to use is we don't think about manual bookkeeping. And that's why I created the bookkeeping kit, the bookkeeping kit. I've included information on what manual bookkeeping is like. I have an article, I have the PowerPoint presentation in that same kit that's free. You saw earlier. You can use that to hire, onboard, train, improve your existing bookkeeping unit. But the point to all this was your bookkeeping is absolutely critical to your reporting. Another way to look at it is your reports are a direct reflection on the completeness and professionalism of your bookkeeping. So bookkeeping is a priority. Using the software in its entirety should be a priority because I can tell you, and again, I'm thinking about the people that say to me, oh, your software is just hard to use. We're looking for something easier. Then the way to get easier is to just not do bookkeeping. You're going to have to skip things. Now, some people will say, it's not that we're trying to skip an invoice. Okay, so it's not like we're trying to skip an invoice. We'll do invoicing, but we just think that there's a lot of fields that have to be filled out. Well, our answer to that is you don't have to fill out any of these fields unless you want that information on a report. So you don't have to put in the sales rep. You don't have to put in the technician. You don't have to add items. You don't have to do inventory items. You don't have to put inventory items on here if you don't want to. You don't have to have a diagnostic fee. You don't have to use our warranty feature, our callback feature. If none of that matters to you, you don't need a report for any of that, then don't use it. But think about manual bookkeeping. Aren't you saying the same thing? We want our manual bookkeeping to be as simple as possible. How do we do that, James? I would say you skip steps, you cut corners. Stop looking at callbacks. Forget it. Don't write it on there. Don't write warranty work. Don't write the technician's name. Don't put the salesperson on there. Don't put the marketing method on there. Don't put marketing methods in there. Don't do any of that. Save yourself a lot of trouble. Go home early. But I can picture a person saying, well, that's not what I want. I don't want to skip all that. I just want good reports. And then we're back to the easy button. There's no easy button. So is there software out there that's easier to use? Maybe easier to use in some way. Something's easier, something's harder. Like they do a better job of this one thing, but we do a better job on the other thing. So really it's going to be give and take. But I think that the main thing is there isn't going to be easy software. There just isn't going to be. Because every one of those steps, every one of those pieces of information will find its way into a report. And you need most of that information. Whether you know it or not, you need most of that information. So let's look at that income statement, for example. Here I have a breakdown of equipment, and we're working with this client, by the way, to get their income statement in better shape. So this could be improved. This is not the end all, but we want to know how much we sold our equipment for. We want to know how much the materials were. we want to know what these things cost us. Our on-call bonus, how much did that cost us? Well, if that was 1,700,000, that's worth knowing, but it's extra work. It's extra work, but there's no easy button for that. And if you want to drill down on it, you double click it and imagine doing this manually, going to the file cabinets and pulling out everything that created that. You saw it run through all those numbers very quickly. So that's 119 pages of detail. All of that represents bookkeeping. Bookkeeping. But it allows us to do useful things. And, the truth is, if it's not useful, then we don't do it. The key to making bookkeeping easier is just we identify what we don't need, what we don't care about, and then we just make sure we're not bothering with any of that. But I would say for the most part, all of you should be using virtually every form in this software, every form. There is hardly anything extra in here that you don't need. There are some tools and utilities that arguably don't have anything to do with bookkeeping. There's marketing and sales and some things like that that aren't really bookkeeping. But for the most part, this is a bookkeeping machine. And if you're not in most every one of these forms, then you're not doing enough bookkeeping to give you great reports. Now, one of the things that's really going to demonstrate whether or not you've been doing excellent bookkeeping is when you start using our Contractor Compass dashboard system, which we've talked about in beta. It's out of beta now. We're starting to roll it out. People are starting to receive it outside of beta. As I mentioned to you before, the dashboard shows you a tremendous amount of really valuable information. The problem, however, is that it requires your bookkeeping department, your bookkeeping activities to be complete. So you have to be using the software. We have people, for example, that aren't happy with the reports and they tell us, well, I don't use it for payroll. All right. Well, what about timesheets? No, I don't use it for timesheets. So they don't use the payroll. They don't put in timesheets. That's fine. I mean, that's totally, don't get me wrong. It's their software. They don't have to do what I tell them to do. But if they're not using the timesheet feature, then they're missing out on a ton of information. People will say, I don't want to do inventory control. I get it. Inventory control is not simple, not easy. It takes a while. But if you're not doing inventory control, then these reports are going to be off by an amount equal to your inventory. So if you don't count $500,000 worth of inventory, then these reports are somehow going to be off, somehow off by $500,000. I hope that makes sense. So in other words, if you had $500,000 worth of inventory, equipment, parts, et cetera, go in and out of your company, and that didn't get tracked, then when you print your reports, they will be off by $500,000 somewhere, somehow. And I know I'm oversimplifying it, but I think you get the point. You can't just magically have accurate reports if you're not tracking that. Same way with your labor. If you're not using timesheets and you're not categorizing all of the labor, just like a manual bookkeeping system would have to do, and this is way easier than the manual method, then you won't have reports on this. So your job costing won't be correct. My point being, bookkeeping rocks. Bookkeeping is awesome. Yes, it's tedious, and we love our bookkeepers. They have a tough job, but they are just vital to keeping the place running and getting the accountants the information they need to create reports. But the good news is now that you are off the manual system, then you don't need the inside accountant doing the trial balance. And by the way, there it is, trial balance. You don't ever have to look at that. You don't need to know. You don't have to go in the account register. You don't have to go in the general journal. You just simply go to reports and start hitting reports. You go to financials, open up your financial ratio and analysis. Let this thing calculate dozens of financial ratios and solvency ratios, efficiency ratios, labor ratios, Altman Z-score algorithm. Let it do all that. It does it instantly. That's your reward for excellent bookkeeping. So you don't have to think about generating those reports. You just have to think about the bookkeeping. Then the last thing you got to think about is once these reports are being generated and they have lots of info, now you want to get into financial analysis. You want to be able to read that information, like you might be able to read a set of gauges. You might have a set of refrigerant gauges. You might have a voltmeter, an amp meter, a multimeter. You might have other things that you're able to read, interpret, use to analyze what's going on inside that condensing unit, heat pump, furnace, whatever it is. Same way with financials. You'll be able to go to these reports. You'll know they're accurate because you've got your bookkeeping all straightened out. And you'll be able to use those reports to make it very important decisions, just like you would as a service tech. If you're not a service tech or haven't been one, you can't really appreciate this metaphor. But imagine working on a heat pump. You have your gauges connected. You're measuring volts, amps, running temperatures and pressures. You're measuring airflow, etc. You are measuring temperatures at different areas of the refrigerant cycle. And you make the decision, this system is not low on refrigerant. It has air in it. There's air in this refrigerant. There's obviously air in this refrigerant. And you know it. How do you know it? Because you're interpreting all the data. You're using your analytical skills. That's what you'll do when it comes to running your business. Their job, if I'm speaking to an owner or a top-level manager, your coworker's job is to deliver those reports, and our job is to help them do that. We can only do so much. And then your job is to analyze those reports and make awesome decisions like there's air in this system. We're going to evacuate it and completely recharge it with clean new refrigerant. All right. With that said, Erica, do we have any questions? You can feel free to
We do
unmute.
not.
We can unmute people if we need to.
I don't have any questions. Today was a light day.
A light day for questions. Anything you'd like to add to this whole bookkeeping process, considering how deep you are into the art of bookkeeping?
No, I think you did good covering it.
All right. Well, I hope I made my point, and that is there's a ton of forms in bookkeeping, and software isn't going to change it. Still going to have the same number of forms. You're just going to be able to fill them out easier, and you're going to be able to generate the reports easier. So just a reminder, Aptora Pros, be sure to go there, Facebook. There's the URL down at the bottom. You could type in Aptora Pros to find it if you forget that URL. And I want to make sure that you take advantage of our upcoming Aptora Live event on August 4th. Get signed up for that. We'll be sending out emails on those. It'll be just like our monthly webinar, but we'll be doing more of them. And I think they'll be a lot more interactive and more fun. Hopefully they'll provide more good stuff. It's going to be more like Colin, my coworker, just reminded me. It's going to be more like a radio show, more like, people on a radio that's happened to be videotaped. Erica?
If you could go over like the 2 links that I put into the chat or the message prompt to cover what's in the Bookkeeper Kit that you have back up on your screen, and then accessing the Contractor Compass.
Oh yeah, so the Bookkeeper Kit, it has an article, I'll call it, on manual bookkeeping, what is bookkeeping, what to look for in a bookkeeper, skills that a bookkeeper should have. There is an ad that you would use to get started. You want to modify the ad, of course, but we have an ad, so you're not starting with a, blank sheet of paper, and it's a proven ad. The ads worked for clients of ours over the years. There is a set of interview questions to ask. Now, we mention this in the material, but we don't mean for you to sit down with each question and ask them. you would pick and choose. We probably gave you more questions than you might have time to ask, but there's some really good questions in there that need to be asked, and they're self-evident. When you see them, you'll say, oh, that's a good idea. I should ask that. And there's also a basic accounting exam that you can give if you'd like to. So maybe you have a candidate that you're really interested in, but you can't make up your mind between him and her. Then you could give them the basic accounting exam if you'd like to. You can also have fun with the exam and just have everybody in the office take it. No big deal if you don't pass it or don't get what you think is a good grade. But all of you should have the ability to pass that basic accounting exam. And then the PowerPoint that you saw today is included as well. And then I have a large article I wrote on how to do manual bookkeeping. It's basically like this PowerPoint, but in a 10-page Word document. That's part of it as well. Now, good news is if you don't like it, you get your money back, full refund. Now, considering it's zero, there's no refund to have, but there's nothing to pay either. So as I said, it's normally $199. It's on sale for $99, but then we have a coupon for $99. You pay zero. Just go through the shopping cart to do that. And I think Erica asked me about Contractor Compass. We are giving Contractor Compass to various companies in a measured way. We'll be sending out an email saying, okay, anybody that wants it, go grab it. But right now we're keeping it on the lowdown. It's out of beta, as I mentioned, but we don't want everybody grabbing it all in the same day because we're concerned about being flooded with calls, tech support, things like that. So we'll be rolling that out slowly. Everybody will be getting their hands on it. Okay. Now, remember, I know you've heard this before, but on the dashboard system, it is really going to expose inadequate bookkeeping. Now, when I say inadequate bookkeeping, that is not meant to be disrespectful to anybody that does bookkeeping. No individual. I'm not talking about individual effort here. What I mean is that you'll realize there's areas of bookkeeping, not accounting, bookkeeping that you're not doing. Like you may not be tracking callbacks, warranty work, senior citizen discounts. You may not be paying attention to equipment versus parts versus materials versus labor. You may not be looking at billable labor versus unbillable labor. You may not be set up for that. Your chart of accounts might be inadequate. You might not have departments. And oh boy, if you don't have departments, it's going to be a mess. So when you hit that button and those dashboards are created, it is not running through an easy button, right? There's no easy button. It's not going to auto magically make everything look okay like some phony software does. I mean, there's phony software out there that looks awesome, beautiful looking reports, doesn't worry you in the slightest, but it's all inadequate, inaccurate. The reports are a mess. I'm sure you've heard about them or seen them. You've seen people talking about that online. This dashboard will expose anything that you're not doing. So you'll all have quite a bit of homework to do, but that's good news. I mean, to me, that's great. It's like somebody giving me this giant punch list of things that I can do to make my business better. I'm all for it. So hopefully you'll look at it in that light, that the dashboard exposed a lot of inadequacies, but that's okay. You'll just work through it until every field gets populated. Now, what do you do once the dashboard has every field populated? Everything you care about is in the dashboard. So you now know what all of your efficiency ratios are, all of your key performance indicators are being measured, et cetera, et cetera. Now, what do you do? Maybe you don't like the numbers. Well, now it's a matter of fine tuning your operations. So you realize, well, we're not making any money in this department. So you go fix that department. Why aren't you making money? It might all be because of labor. You might not be performing well enough in converting precision tune-ups to replacement opportunities. So the dashboard says to you, you've created 0 sales opportunities from demand service. First thing you might do is say, well, that's not right. So you got to fix the bookkeeping. Now that the bookkeeping's right and the number is right, you say, well, I don't like the number. We're not doing a good enough job. That's fine. Now, at least we have the number, right? What gets measured gets done. What gets measured gets done. Now that it's being measured, now you can work on it. And you won't get it all done overnight. It could take years, maybe, but at least this way, you know what you need to work on. And my goal with these dashboards is to leave no corner untouched. I want to report all the important numbers to you, and we do. But if we come up with better ways to do it, maybe some of you have different ideas, you can voice those, and we'll certainly work on improving it. Erica, does that cover that?
It does.
All right. So like I said, this is coming from our green room, our studio room. I have room for guests. I plan to have some of our clients as guests, maybe not in the studio, but we'll get people on the phone, talk to them, think about like a call-in radio show, like a Joe Rogan show. It looks like he's just talking to people with a microphone and a headset, and somebody happens to be videotaping it, and they never even look at the camera like I am now. I've ignored the camera the whole time. They don't even look at the camera. That's the kind of forum that we're going to create. And I think it'll be fun because I want to have accounting people and bookkeeping, and I want to have clients and software users, and I want to have people that don't like us, and I want to have people that like us, and people that don't like me. The more the merrier. I think it'll be great. As long as we're learning, it should be a ton of fun. So watch for those emails. Erica, I'll give you the final word.
I'm all good.
The final
Sorry,
word
my
is...
allergies are killing me today.
Oh, is that why you're so quiet? She's
Yeah,
not usually like
I'm
this,
still
folks.
hangover from Benadryl.
Usually we can't get her to stop talking. All right.
Not
Well,
today.
once again, I want to thank everybody. I know it is hot out. Hopefully you're busy making a ton of money. You came to hear about bookkeeping, and that took some courage. I hope you got something out of it. And more importantly, I hope to continue to see you on these events, and I hope you'll continue to communicate with us, and I hope you'll see me on Facebook at Aptora Pros. Thank you, everybody.